I mean, everything I've built has been accidental. I don't know if the audience knows, but I'll go through some of them. Like Yearn, right? Yearn Finance. I started building because I just kind of got into DeFi. That was, we just had Uniswap, Compound, DYDX, Fulcrum, a bunch of stuff you haven't even heard of anymore. And they were all offering interest rates for lending your ETH for your stable coins or whatever. And every day, sort of as a hobby, I would check all of these different systems. I would check their different APYs and APRs, and I'd see where the highest rates are, and I would move my stablecoins. Now, also for the record, back then, moving between a protocol cost like a few cents. It's not exactly what it was today, so it was also a very different environment to play in. But then one of the things I started thinking is, instead of me needing to manually monitor all of this and move it on a daily basis, why don't I script it? And that was actually the first time I started learning Solidity, and that's the first time I even got into Solidity. And then I learned most of the Solidity I know today by looking at other protocols and how they do these things. And I scripted a little few files that just, would check on-chain APRs and then move between the different protocols. But I still had to, at least once a day, interact with the contract, because the one thing about Ethereum and any EVM-based system is, how to describe it? It's stateless unless interacted with from an external force. So what that means is nothing inside of Ethereum itself can cause its state to change. An external trigger has to come from the outside and do something. Now that's commonly, all of us doing transactions on the network. As soon as you do a transaction, that causes a state transition. So now I needed to interact with this thing on a daily basis. And even that, I realized, was a little bit annoying. And that made me start to think, but what if I open this up? What if I let anyone deposit into this thing, and every time they deposit or withdraw, it checks what's the best rate, and then it moves it between this. And then I launched what was iEarn back then, which later became Yearn, or YEarn as it is today. And the whole principle there, it's such a simple concept. It's just, hey, if we all do this together, we will get higher interest rates, because whenever we all interact, it optimizes it. And I mean, that was the whole concept. It's really that simple.
The week before, when you tweeted something about VE33, they were like, what are these guys up to?
Yeah, happy to. So VE, Vested Escrow, was originally designed by Mitch Will from Curve Finance. Sorry for the shorthand. The concept there is really simplistic. Is you wanted to split the people who have liquid incentives, aka Curve as a trading token, and those didn't necessarily, I don't want to use the word deserve, but they shouldn't have as much weight as the people who are more long-term committed to the protocol. And now if you start looking at it from a DAO perspective, because Curve is a pure on-chain DAO, it's beautiful in its design. All of the votes have to happen on-chain. New Gorgias have to be added on-chain. New rewards have to be added on-chain. So all of those things have to happen on-chain. So now from that perspective, he couldn't really have liquid Curve have the same amount of weight, because what can easily happen then is someone can flash loan a massive amount of Curve. They can enact a vote or enact a reward system, or even do things like, drain the community fund, these kinds of things. And that's very, very dangerous. So how do you negate that? You have to give different weights to different people. But now this is a Sybil-free environment. You don't know who the people are. You don't know what they're doing. You don't know. There's no credibility behind an Ethereum address. And even if you were to attach credibility behind an Ethereum address, you will eventually have a secondary market where people sell that credibility, and that's used for exploits. So he came up with this idea, look, let's give benefit to the people who are willing to vest or invest, depending on which way you want to look at it, in the long-term success of this protocol. So he created Vested Escrow, which is VE, and that created VE Curve. Now how that works is it's basically a decaying ratio from 4 years. So if you lock up your tokens for the maximum amount, which is 4 years, then one Curve is equal to one VE Curve. So that's what he wants. He wants people who are vested into the protocol for the next 4 years. If you only lock up for the next 2 years, then one curve is equal to half a curve. So you'll get 0.5 VE curve, all the way down to 1 week, in which case it's a small weighted amount. But now this way, if I do a massive flash loan, which I can't do because I have to lock it up, but let's say I convinced some large curve whale to loan me a lot of curve, and I have to pay it back at some ridiculous interest rate, I'm not going to lock it up for 4 years. I might lock it up for a week. But even if I lock it up for a week, the decaying rate is so small that the weight is tiny. Now, so that was the reasoning behind the model. But obviously, what ended up happening is a whole ecosystem, behind that, because on top of that, now VE curve had a lot of weight, because VE curve is the thing that decided which pools got whitelisted, which protocols got whitelisted, who got curve rewards, and all of these different things. So that started creating a bribe environment. So now what people started doing is let's say I launch a new token, let's say I launch a new algorithmic stablecoin, right? And now I want as much liquidity against MIM as I can possibly get, because the better my peg, the more belief there is in that I can hold this peg, and the better the protocol is. And while Curve is a stable swap mechanism, so it's really good at trading assets that are closely correlated, it's also a very good pegging mechanism. So what that ends up meaning is, like if I were to put it in Uniswap, it gravitates away from 1 equals to 1 a lot faster than if I put it in Curve. It's going to hold that 1 equals to 1 peg a lot longer. So especially algorithmic projects or new projects, or any new project that has to prove, hey, my stablecoin can keep peg, whether it's a SDETH for staked Ethereum, or whether it's a new collateral backed coin or an algorithmic coin, doesn't matter. You need public belief to be convinced that this thing is going to keep peg, and curve pools are very good at keeping peg for you. So the one thing is obviously getting your stuff into a curve pool. Now that in itself, back then, it did actually require the curve team to do it manually, but then they ended up releasing factories, which is nice. Now anyone can deploy it. But even if you deploy it, you're not going to attract a lot of liquidity. Now, a reason why a lot of the pools have as much liquidity as they do is because they earn curve incentives. If you are an LP, a liquidity provider to one of these pools, you get the curve token, which is fantastic. And you can lock that up for more VE curve, which boosts your rewards even more. And there's a whole little meta game there as well that's quite fun to play. But so you want those curve incentives basically along with your own incentives. But to get that, the people who currently have VE curve have to vote for your pool to get rewards. Now, at the start, that was difficult, because one, you didn't know who these VE curve whales were, you didn't know who to talk to, you didn't know who to convince. So it stagnated for a while until bribes started getting into the play. Because now all of a sudden, hey, I can offer 1% of my circulating supply to make sure that these VE curve whales vote on the pool, and made things a lot easier. Now I just throw my tokens into the contract. If they vote, they get to claim it. If the pool gets approved, they get their reward. If it doesn't get approved, they don't get the reward. Things like that. And from there, okay, so that was sort of the one meta game, which is obviously one big thing. As much as we're all in this industry, I mean, most of these technologies haven't even existed for 4 years, other than basically BTC and ETH. So taking that kind of a long-term risk on something fairly new is really difficult to do. You don't know, will the team still be around? Will they have become so rich that they just, bought some island in the Caribbean? They're never going to talk about blockchain again. Like there's a lot of unknowns. So it was a high risk cost opportunity for a lot of people to actually put money into VE curve, because you're taking a very long opportunity cost on your capital, which even if you have conviction in the curve protocol, opportunity cost in this space is still a massive thing. And at that time, Convex came into the ecosystem. Now, well, technically, Yearn already had YVE curve back then, but it was a very different model. So I want to talk about Convex specifically, because what Convex did is, Convex said, look.
Welcome.
Yeah, okay, so just anecdotally speaking, as often as this stuff is breaking while I'm trying to talk here, this is how often my smart contracts break. Never put money in there. Never, no matter what you do.
It's a role-playing effort.
Yeah, I don't know what's going on. Like, I've changed networks, I've killed everything on this phone. I don't know. But anyway, I'm just going to keep trying at it. I was saying something about Convex. Convex came in, they had this idea of, look, you as a individual probably don't have enough curve to boost your own position to 100%. So instead, we as a protocol are going to start collecting enough curve to boost your position to 100%. And they did that by essentially selling Convex token for curve. So you give them curve, you get CVX. Um, they have their own CVX curve later on as well that they got, and that gets extra rewards. And as you stake it, you get more rewards, and it's a very elegant system. I'm very impressed with what they built. But the concept was basically, let's what's the word I'm looking for? Let's combine a bunch of little people's curve into one massive curve pot, and then everyone can get boosts. And I don't have pure data on this, but just anecdotally from what I've seen from people staking via Convex versus people staking directly via curve, most LPs have moved over to Convex instead of directly with curve. So there's a lot of sort of abandoned VE curve at this point that unlocks whenever it unlocks. And then on top of now as Convex kind of ended up almost monopolizing all of the curve supply available because that beautiful tokenomic model was, again, very elegantly designed, but it got to a point where they had the majority of curve, more so than any of the founders, any of the team, any of the core members, anything like that. So now all of a sudden, to get your pool whitelisted or to get rewards or to have something enacted, you had to go through Convex. So, and now another interesting thing happened is after a while, Convex introduced voting, which they did off-chain, which is very useful for on-chain voters, not decentralized, but that's a different topic. It's very user-friendly, which is a good thing. I do think we focus a little bit too much on decentralization in this space sometimes. Sometimes a product desires UX more so than decentralization. But again, that's a different topic. So now you vote. So now you have two choices, right? You can either use your VE curve to vote what kind of distribution of the curve token goes as rewards onto a given pool, or you can use a Convex token. Now, one Convex token represents, I'm not sure what the current numbers is, but last time I looked, one Convex token represented between about 8 to 9 curve tokens. So you can either have one curve voting power, or you can have one CVX and have 9 times the amount of voting power. So this started, now again, remember, right, and I'm jumping a little bit all over the place, but now remember, more or less at the beginning, I said that curve is very useful for new protocols that have tokens that need to keep peg. So, this is true for protocols like Badger. This is true for protocols like Frax. This is true for protocols like Abracadabra. Even older protocols, Maker, Dai, even traditional stable coins. It's very valuable for all of these guys to have high emissions on their pools. And the way now all of a sudden, so previously they had to get a lot of curve and lock that up into VE curve for 4 years, which is a massive capital expenditure, and it's very risky for a lot of these protocols when they don't have that much cash to work with. But now they could start accumulating CVX token. And the CVX token only has if I'm not mistaken, a 16-week lock, which is a lot less of a opportunity cost, capital cost, when you need to participate in this little meta game that's happening now. And so we started seeing a lot of these protocols accumulating a lot of CVX so that they can start manipulating, manipulating, I'm going to stick with that word, these vote incentives onto these different pools, because the higher the incentives, the more liquidity, the better peg, and also the better public belief, and also the bigger trades people can do. So there's all of these little meta games that have developed into this ecosystem. And now I'm not even talking about stuff like Votium, which was built on top of that to create the bribe system for CVX holders instead of VE curve holders. There's Redacted Butterfly, which is also now accumulating CVX with their own model to also help these voting things. I saw they released something new today. I haven't looked at that yet. And so many other games that sort of evolving on top of this. But a main premise, and this is a big sort of motivation behind our new design, which is sort of called VE33, but the protocol is Solidly or SolidSwap. The motivation there was the realization that all of a sudden these games aren't really for users anymore. They're for protocols. They're for protocols that would like to keep peg. They're for protocols that want deep liquidity. They're for protocols that want to incentivize their own token with something that they believe has a better chance of surviving the markets necessarily than themselves emitting the token on their own pools or whatever the logic can be. But we started seeing more and more protocols absorbing this stuff. So going on to sort of naturally evolving from the VE model. Let's now the cool thing is if you just look at VE, right? So quickly ignore curves, stable swaps for a second. Just assume there's a protocol that is capable of generating revenue. You can attach VE on top of any protocol because one, it allows your long-term holders to receive voting power, which is great. It allows your long-term holders to receive fees, which obviously is also great. Apologies. And if it's an emission-based protocol, it allows your long-term holders to be able to direct where that emission goes onto, and this is true for all protocols. Like if we look at SushiSwap, a big reason why they also had good success with TVA and all these things is because they're an emission-based protocol. They give incentives when you provide liquidity onto those pairs. The one thing where it starts being a little bit misaligned is those incentives are for liquidity. They're not necessarily for the fees you're capturing. So if you look at Curve, it's capturing trading fees, which you can argue is a net function of liquidity. The higher the liquidity, the lower the slippage. The lower the slippage, the more aggregators will route through your pool, which means the higher the fees. But it doesn't actively promote the fees themselves. It indirectly promotes it. If you look at SushiSwap, the Sushi emission isn't necessarily on the most traded pairs. It's a little bit team decide based on how much the emission goes out. So there's also not really ex-Sushi voting control that's happening there. I'm trying to think. Aave, they've got their adjustments in terms of where their liquidity incentives goes on top of which protocols you're borrowing, but that's also a little bit abstractly team decided. It's not based on you voting or redirecting anything. So again, there's no feedback loop. So VE is already a great solution because VE is a good feedback loop. If you attach VE now to Aave, it also works because what ends up happening is, let's say I'm a big depositor of, I don't know, MEM, and I put MEM in the protocol, and now I'm also a big VE Aave holder. So now I redirect those fees onto the borrowing rate for MEM. And now as the borrowing rate goes up, because there's now more incentive to borrow, because there are now more fees, it means there are more depositors because the interest rate for depositors also go up. So now there's more TVL as well. More TVL means the fees just went down, which means more people borrow fees. So now by emitting these emissions, I'm increasing the fees of the protocol by that VE decision I made. So no matter the protocol, you can attach it to it. So kind of like at its highest level and sort of where the conversation started was just looking at, hey, what if we take a SushiSwap, a Uniswap, whatever you want to call it, a standard traditional AMM, and we attach this VE model? Because now all of a sudden, people can use this VE token to vote on where the emission should go to. That emission rewards pools with higher fee percentage. That fee percentage goes to the VE holders. So the more they're diluting via voting for emission, the higher fees they're getting. So, it works on any protocol, and it's a very elegant solution too.
So what are your thoughts on that?
Yeah, so like the biggest problem is like, as you know, like both me and you and many of the listeners are actually VCRV lockers. I am myself, like without even convex, Wonderland DAO is one of the largest CVX holders. So it's not that we are saying that everything is bad. Like, don't get me wrong, right? But it sometimes takes a little bit of leap to build something completely new. But just by designing the token economics, in the case of SolidSwap, it's not enough, right? You need to prove that the system works inside of an environment. So in this case, an AMM, and that is sustainable long term. And this was kind of the idea that he comes here. Like, you need to, like, everything on paper is good. Like, oh wow, yeah, it's gonna be fucking awesome. We solved all the problems of a lifetime, you know. Like, everything is gonna be much better. But if you don't, like, throw it out there, and this is what I really love about Andre, and I'm really looking forward for all the things that we are gonna do together, is that he's like me, not afraid of just go out and just breaks and shatter things, and like, let's go, like, let's try it out. And it's not gonna be perfect. Nothing is gonna be perfect. Like, BCRV was perfect till it was not perfect, you know, like, till it become convex, like, and it's totally fine. Like, I'm not saying that it's not good, but if we want to keep innovate the space, we need to try new things, right? And stable swaps is something that is in high demand, especially for chains like Phantom, which do not receive, in my opinion, because of the of all these convex wars and all of this that is happening, they don't receive enough incentives to move the liquidity into Phantom. So we said, like, okay, so how do we do something better that really helps the ecosystem of Phantom, that really helps the Frog Nation to have something on the new chains, and what can we do that really is sustainable, and how can we improve this V model, token model, and how do we actually, like, another topic was like, how do we actually launch it in a fair way, because every idea was a little bit difficult, because we are very lucky that between, like, all the projects that we have launched right now in the Frog Nation is really self-sufficient. Like, it doesn't require to raise capital, it doesn't require to do ICOs or anything. We're just here to build things that in the ecosystem work together. And yeah, here it comes SolidSwap, and and I think Andre, you have more to say about very specific design decisions on V33 and SolidSwap and how it works. But I think I send, like, the message of why, which was important to send.
Yeah, really nice breakdown on what you guys are building over there. And I think, you know, one thing that I know is standing out in my mind that I see a lot of talk on Twitter and in social circles is around the distribution of this new token. This idea that, you know, maybe a little angst on the part of Frog Nation saying, you know, how is this going to be distributed? I want to have fair access to it. Could you maybe talk, either one of you, a little bit to the decision you landed on and how that's going to look?
Yeah. So I'm not going to give too much alpha around here. Sirs, if you're here to gonna get the half of how you're gonna get the tokens, I'm sorry, it's not gonna happen so much. But as Andre has posted already, we're gonna take a snapshot of the top TVL projects on Phantom, but that doesn't say how the token is gonna be distributed regarding of TVL. If it's gonna be like TVL based or just project based or mix in between. But what is important to know, and I think is one of the coolest parts of this design, is that we are gonna distribute this token to top 20 projects, but it's gonna be locked, right? So everybody will have, all these projects will have the time to decide where to allocate the rewards to starting the week after. So it's just like the first vote, the first thing. And these tokens can't be sold because they're locked, and they will unlock slowly. But the part that is even more interesting, and they got front run by Paint, or however it's called, the protocol, is that these tokens and all positions that are locked can be encapsulated into a non-fungible token. So an NFT that represents such voting power. So this is really something completely new that I think Andrew you can say something about, which is super fucking cool.
Well, so thanks, Danny. And yeah, I'm back. Let's see how long this time lasts. A big thing, and me and Danny went back and forth a lot on this, and we ended up including a lot of other founders and things to talk as well. Is the initial distribution is actually a real problem, because once a few people have the solid token and they have a few locks, they can direct where the emission goes. They can decide what pool it is, whether it's spell mem or mem UST. It doesn't matter if it's volatile or a stable pair that's handled within the AMM, but once the emissions are flowing, then it starts making it very easy for the distribution to kind of continue. So initial distribution is where the problem comes in. Now, normally projects don't really have a problem with initial distribution because they'll do a seed round, a private sale, an auction, whatever it is. And of the lot, the one we thought is the fairest is kind of doing an auction model over, like an LBP or something over X amount of time, because that at least gives enough people chance to participate. But we don't want to raise money. Raising money just adds a lot of complications, a lot of flags, a lot of red things that, like from an experimenting point of view, it's just not worth it to risk it. So that option was out. Option number 2 is we just add liquidity into a pool and people can just, buy from there. Now that it's not really fair because it depends on who's awake at that time, who happens to see the pool, who happens to be able to, snipe the liquidity as soon as it's added. There's a bunch of complications there that mean it's not really fair access to everyone. The sort of third option there is we decide. We can sort of allocate ourselves the initial voting power, and then we decide which pools it go onto. But that again creates quite a bit of favoritism, which we also didn't like, and it also means that the decision is in our hand. And personally, from having experience in this space, no matter the decision, someone's going to be unhappy with you. And now the other problem is, we work very closely with a lot of these other protocols, SpookySwap, SpiritSwap, Beethoven, any of these guys, and we don't want to be seen as a competitor to any of them. And Solidly was also designed specifically not to be a competitor in that, and I can get into that later. That's a little bit more technical, but the way that if SpookySwap has their people provide liquidity into the Solidly system, they still get the fees. So their AMM model can still look the same, which is nice because it means it's not competitive to these guys. It's complementary as a protocol to them. So we ended up coming up with this idea of, okay, so we can't just dump it into a pool and have people buy it. We can't do an auction. Any kind of distribution or airdrop means that we're adding our own bias in terms of how we're doing this, and it can be seen as competition. So instead, why don't we give these rights to all of the people in this ecosystem, that we're working with? And also a little bit tongue-in-cheek, and I apologize to any of these protocols, to also just make it their problem, because now all of a sudden we don't have to worry about it, they have to worry about it. So my apologies, but it is fun watching it play out. So the idea became, let's take the initial, just that initial vote, because that's all that really matters, is just where does the initial tokens being released go to, and to which pools do they incentivize? It doesn't matter what that pool is. If SpookySwap decides they're doing Spooky FTM, that's fine. If they decide, look, they want to instead emit it to Memspell, also fine. It doesn't matter where they end up doing it. They can even fractionalize it and have Spooky holders vote on where it should go, because you can do fractionalized voting as well. So there's a lot of fun things that these protocols can do, but it ends up being additional access for them. It ends up being additional fees for them. And it also kind of democratizes, I want to say decentralizes, but it's not really decentralization. It's more like distribution, I guess, as in distributed system, not as in distributing the tokens, and making it, everyone's choice. So now all of these protocols can start interacting with it, and they can make the decisions, and they're getting these extra incentives on their protocol, and they're getting these extra fees. And another reason this was important is because this AMM is designed for protocols. It's not necessarily designed for traditional users or LPs. Traditional users and LPs can still use it and they can still interact with it. But one thing we saw from Curve and Convex is that these AMMs are more important for protocols than they are for users. And another important thing, I've often built stuff like the fixed forex keeper thing as well, which is also a bunch of stable coins. Now they're sitting in curve pools, and keeper is doing a mission to add rewards onto those curve pools, but we're not getting any fees from any trades happening there or anything that's being facilitated in those curve pools. So, but if we could get that fee share somehow, all of a sudden it starts making a lot more sense for the protocol to do it. So this AMM is also designed with that in mind, that if you're the project that's adding the incentives onto your pool, so let's say you're a new project that launched, you now launch your pool 2 into the AMM, and you want people to swap and trade in there, but you also want to collect something for your own protocol. You want to be able to show, but hey, we're also getting fees from these trades, and that's a big thing. We saw that with the whole protocol owned liquidity concept, where being able to generate fees from your treasury is an important thing. So that's already an added incentive for protocols to launch on this, because now they can actually capture those fees themselves while adding those incentives. Other than that, same rules apply. You start with your 40% boost up to 100% based on how much you have. So that same meta game still exists there, which does mean that protocols like Convex can still come into existence, but there's no whitelist. So one important thing about Curve is who is allowed to lock VE Curve is controlled by the DAO itself. So not anyone can. Any address can, but not any smart contract can. So eventually, Convex just got so much control that right now, why would they allow a competitor into the market? There's no whitelist in this new solution, so any competitor can come into the market. So what we'll probably see is, whoever's paying the newest, freshest token of the week is probably going to accumulate most of the protocol's incentives, and that's fine because it adds another layer of a meta game there. But so you can emit the token itself onto any one of these pools. Now, another modification we added in there is how do we align that where you vote is where the best fees for the protocols is? Because now looking again at normal VE designs, you get the fees of the entire protocol irrespective of what you do. So you can lock your tokens for 4 years, sit back, you're going to get fees every week. You don't actually have to do anything. But we didn't want that. We want the system to self-optimize for fees, because if it self-optimizes for fees, the flywheel is going to keep spinning. So we just added one small modification in that you only get fees from pools you vote for.
The system will actually allow me to come in and say, okay, I'm going to take one tranche of my coins, I'm going to lock it up for 4 months. I'm going to take this next tranche and I'm going to lock it up for 1 year. This next tranche, I'm going to lock it up for 2 years. Is that correct, or have I misunderstood?
Yes.
This?
So you're very flexible on how you want to lock, and that is a very cool thing. So you can create these NFTs a little bit like the Uni V3 thing, right? All positions are different, but in reality there is a different NFT of each one, and potentially you could sell that NFT if it were locked. Like imagine it like your Uni V3 position, instead of being unlocked like it is now, that you can withdraw whatever you want and earn the fees. In this case, you have a V Solid or V Rock, because we're gonna alpha the name of the token. Then you can take this NFT, and the NFT represents your position and your lock time and your voting power. Like this, why this is so cool is because it allows a new layer of composability. And before we re-dive into this, I will give you some context of, for example, how we can use these NFTs. With Abracadabra, is quite some time that I don't talk about what we have been developing, but actually we have been developing quite a lot of new things and new features for Abracadabra V2 that are already in production. One of them is NFTs as collateral. So about like 3 months ago, I was talking with Merlin, and I was saying like there is very likely a market that is an OTC market, and how the real world works is that hypothecs or loans are more non-fungible than fungible. So not everyone has the same conditions. Not everyone is goes to different banks, different things. So you could imagine as your hypothec on your house more as an NFT, because the contract that you have with your bank is what matters. Like those are the conditions. One have one for 10 years, another have another for 20 years, fixed rate, another have a flexible rate one for 3 years that then renews after, right? There is a lot of complexity into the real world finance that in reality needs to be translated into DeFi, because I'm a big proponent of DeFi more than being important for creating brand new things, is to replicate things that exist already with a focus on decentralization, so self-custody specifically, and access. Like I don't think that we need to completely reinvent the financial world. We just need to bring the products that are already popular and important for everyone in the world and make sure that anyone can access them no matter what at certain conditions, and that the custody of such assets is completely decentralized and managed by a blockchain. So this is always our focus. Then we did say, and Sifu was like, oh Daniel, like I mean, I would like to be able to have like OTC markets in which I can tell to my friend that has a lot of CVX, for example, that he can borrow me CVX, and I can short it or I can long anything. So I can figure out a way. You should figure out a way in which we can create this like peer-to-peer markets. And this reconnects with the idea of the NFTs. And I said like, yeah, but if we're gonna do this peer-to-peer markets, we need to think about what are the conditions. And like in the real world, like out here, everything is time based. Like so you take a loan, it's time based. It's not based on like just your collateral. It's based also on the time that this loan has to be repaid. So with the concept of introducing the concept of time into a loan is something that is not really in DeFi right now, but we did it. And it's very important because it allows anyone to basically lend money to anything, right? So as long as the conditions are matched, so basically like an order book type of thing, then you can create any sort of market in which I would say, like, for example, I have CryptoPunk, and that CryptoPunk floor is, I don't know, 20 ETH. Then is there anyone out there willing to borrow me 10 ETH in exchange of these CryptoPunks if I get liquidated, that I don't pay within like 3 months with a certain interest? So now with the new model, that the V33 model, what we introduce is that theoretically, even if you have a VROC token that is locked for 4 years, you can still generate a borrowing lending market with it, because the asset is there. You can add it to Abracadabra and request the loan, basically. At what condition, it all will depend on how we structure basically the UI to make it as simple as possible, but this is something we're working on right now. But the reality is that it really opens up liquidity into a protocol that really becomes 360 degrees complete, in my opinion. Like, one of the reasons, and you know very well, Messi and RT, one of the things that are important for people is capital efficiency. And as you mentioned, Andre, before, like locking for 4 years into like into this industry that DeFi doesn't even exist since 4 years, right? It's a very long bet. And being capable of still having access to capital while you're locked, and you get all your fees and you get passive income and so on, it's a game changer. Like, and this is like the power at the end of like the Frog Nation, right? And putting together all these projects and build new things with in mind everything else that we have in the ecosystem, and the power of composability, because then you really unlock full potential of these new projects to scale and allow people to take opportunities when they can, because they actually can take a loan or borrow or whatever, or sell this NFT and to somebody else that wants it, or get bribes and use it as collateral, and then with the degen box they still receive all their revenues and all the bribes, and they can steal votes. You can imagine like the infinite is really, the universe is infinite, right? And I am the most exciting thing about like working together with Andre is that like he is a fantastic builder, and he has, and a lot of builders in this industry are very good coders, but they don't have very good ideas. Like, and Andre is the one that has both great ideas and great skills.
For example, on the SolidSwap, now that we know the name, what are we actually going to be able to swap? Is it for pegged assets? Are you going to be able to have unpegged assets? Like what's going to be traded here?
Cool. I'll jump in. Both is the simplistic answer. So the standard AMM rules apply. X times Y greater or equal to K. That's traditional AMM. So that's more like Uniswap v2 or SushiSwap or any of these protocols. It's not going to be as efficient as Curve v2 or Uniswap v3. It does come with that capital efficiency trade-off, but it has all of the other benefits of the system. And then the main thing, the protocol was actually originally called StableSwap because we have this new curve X to the power of 3 times Y plus Y to the power of 3 times X, which gives you the same curve as curve. And I know there was a lot of times I used the word curve, but just curve.phi versus a mathematical curve. So you have both. You can swap between volatile assets or stable assets. When you create a pool, you decide if it's a stable or a volatile one, and everything else works as normal. So you can still chain swaps as well. So you can go USDT, ETH, SDETH, whatever it is. So you can have multiple ops as well, which makes it a lot more efficient. But the AMM itself at its core is a combination of traditional XY and what we're calling X3Y plus Y3X, because it's nice and it's got the 3-3 in it as well, which is a little bit mimetic, which is just a fun trade. And sorry, just one thing to add on the VE where the 3-3 comes from. The 3-3 is this concept that stakers in the ecosystem need to be rewarded more than non-participants. And if everyone stakes, everyone's happy. So with that, there were 2 extra modifications we made onto the VE tokenomics. Number one is, so a current thing with emission-based systems, even if you stake, whether it be XSushi, whether it be VE Curve, whether it be Convex, it doesn't really matter. There's constant emission. There's constant new tokens being minted and introduced into the ecosystem. So you're always playing a game of catch up. But the nice thing about all of these rebase tokens, whether it be Ohm or Time or etc., is it means you because you rebase while you're staking, you stop thinking of it in terms of price and trying to catch up, but you start thinking of it in terms of what's the percentage of the protocol I own. Because even if the circulating tokens double, if you owned 5% of it when it was half what it is now, and now it doubled, and you still own 5%, your position is still the same. The price might have halved, but your value net differential is still exactly where it is. So the other thing, and that's where the 3-3 comes in, is that stakers get proportionally rewarded equivalent to mints. So if there is 2% of tokens minted in this week, the VE3 lockers get that same 2% added to their system. So as a percentage, you're always owning the same amount of the protocol. And then the secondary part of that is we also want to decrease emissions based on circulating supply. So the more tokens that are locked up, the less tokens should be emitted, because now let's say 99% of tokens are locked up and there is only like 2 million tokens in circulation. Now you don't want to mint 20 million tokens because that's going to horribly ruin those few tokens that are in circulation. So instead, 99% is locked, so only 1% should be emitted of that 20 million. So you end up only getting 1% of that being released into the system. And these two extra mechanics play nicely with that whole 3-3 ethos that, you know, the more people stake, the more people that do the long-term bet, the better it is for everyone in the protocol. But at the same time, it's designed so that even, you know, when everyone isn't 3-3, the lockers still get the benefit because they will always proportionally grow. But anyway, so that's sort of the tokenomics side. And then as you asked on the protocol side, the big stuff there is the built-in TWAPs, the fee reclamation for projects, the new Y3 X3Y curve, in addition with the normal, you know, XY curve. And then a few other things that are falling off of my brain right now. Because
it will be, I'm curious regarding the airdrops. Andre tweeted saying the top 20 TVL. So my question would be, do you have a time period? Because some of the projects are there longer, they have accumulated, and some are there shorter, and they also on the list. So can you please talk a little bit about that? Thank you.
Yeah. So it's funny because it's like it's the when airdrop whole question. So we are looking at first of all, like Andre and the team and everybody's looking at the most security possible on when to launch, right? So we yet don't want to give a timeline of when, but it's gonna be soon TM. Like what I think, what I can tell you what I think is gonna happen. Like so these projects are gonna get their allocation, and I think some smaller projects are gonna list their NFT for sale, and they're gonna raise money from it. And I think they will ask the community to vote for it. And I think it's great because that's the spirit of the Frog Nation. Like when we said like how we're going to distribute it, and then you will see one of the things that we wanted is to also allow the smaller projects to raise some capital and have some money there. Instead of us raising all the money, we can kind of let the smaller projects grow and get some return out of what we have given them as of the tokens that we give, right? So it's really like a frog thing. Other projects instead that are a little bit bigger and maybe don't have the requirements of capital to keep innovating or keeping their bills and stuff like that, then they're gonna start voting, in my opinion, for things that are beneficial for them, right? So well, much likely, for example, Abracadabra, how it's going to unfold is that Abracadabra, if it's in the top 20 still, which I think it's going to be, is going to vote for Magic Internet Money pairs, right? And it's going to go out hunting for like who is going to get bribed for pushing our Magic Internet Money pairs. And other protocols like Spooky, for example, it's very likely to just decide to get bribed because they have their token and they want to give it to XPOO, very likely as an additional yield for XPOO. Then we will have Geist instead that is going to want to use their own token for allocating to the A token, so the Geist token, rebase tokens pairs. So they and in this we have the cross reference, like if Geist have Magic Internet Money, then we can kind of go together, you know, and push certain pairs together. So that's why I want to reach out to them, and I will do that tomorrow actually. And these are very interesting like dynamics that play out into this type of airdrop. Like we wanted to show everyone that the Frog Nation is a very inclusive and really cares about the ecosystems in which we invest in. Now we are very much invested into making Phantom a success, and we want to reward the protocols that have been suffering or have been like, there hasn't been like an easy time for the Phantom ecosystem, to be honest. There wasn't a lot of VC money buying their bags or pumping their bags or holding stuff. They have been diluted quite a lot. It has passed a lot of time. Like, I have Phantom in my radar from the early beginning. We have been deploying the first successful token of Phantom back in the day last year. And this is really like a moment of truth for the Frog Nation, because we come back home and we come back with gifts, and we come back with power, and we come back with a lot of stuff that is happening. We come back with sushi. There's gonna be a lot of cool shit coming from the sushi side that it's really amazing. We have SolidSwap with the Rock token, with the new economics. We have the new pairs that are coming, I think tonight or tomorrow, on Abracadabra, with new collaterals and XBOO, new FTM, ICE, and the very cool stuff. So we want really to support the ecosystem. And then we have some other super insane stuff that is happening of magic internet money and centralized exchange listing with Phantom, so alpha here. so very cool shit going to happen. And I think really this airdrop kickstarts the new season for Phantom. That's my feeling.
Absolutely. Now we've got Robert Cow, NFT Frog. Come on up.
Greetings to the leaders of Frog Nation. Probably my question is to Daniel. Daniel, we know that Wonderland is a hedge fund, an investment DAO. So how Wonderland is going to invest in Andres project in Solid?
Well, as you know, like the same way that these guys did with the V token, we could actually replicate the VDAO or whatever it is, but we're not gonna do it. Like we are out hunting to bid the NFTs that are out there, right? The ones that are for sale. So reaching out to the projects that are maybe smaller, that require capital, and maybe do deals in that sense. So maybe we're gonna invest some in their tokens, some in their NFT, you know. And this is how we're gonna play it. Additionally, we have quite some capital ready to deploy. I don't know if you look at our treasury, we have 180 million in stables that have not been deployed yet. One part of that is gonna go into the new Frax 3 pool leverage farming, which should give us around the 7x leverage, and about I was looking at 98% APY, and the rest is gonna be deployed as TVL on SolidSwap to make sure that the project has TVL from the beginning and has depth into the correct pairs, the meme pairs. And as soon as that happens, we are gonna test it out and prepare the cauldrons with the new oracles that Andre designed, and create leverage farming for everything. It's gonna be fucking nuts.
Ooh.
This is pure art.
Okay, great question, Robert. Thank you for that. Next up, we've got Chainsight Analytics with a question.
Yeah, I was wondering if Andre could talk a bit more about the Keeper tokens foreign exchange decentralized on-ramps.
Yeah, I can talk a little bit about that. So Fixed Forex is currently, Popsicle is under development for the Fixed Forex pairs on Uniswap V3. As soon as Tridentos is going to deploy, it's going to be a focus, because of course the Sushi Swap is part of the Frog Nation, so we're going to transition that there. And as this develops, we can create a much more concentrated liquidity, better fees for everyone, and especially with meme pairs, we can create the leverage farming on it. So it's gonna be pretty awesome. Just takes a little bit of time. This whole stuff is very complex tech. So, and especially with my experience of what happened with Popsicle, that I repaid myself. I would like to avoid to lose another 25 or more millions, because as you know, guys, I always put myself in the front. So this is just why some of this like advanced tech takes time to be developed, and there is also research part that needs to be taken in account, like on how to optimize and so on. So
can you talk about the VE DAO? I know it's not an official endorsement in any way, but that, unlike all the other projects which were kind of established, this kind of came out of nowhere, and would just love some, security that this team behind it is at least known in this space. I assume so if, Andre, you're promoting it. And secondly, man, Danny, you are on fire with, 400 projects you're working on. With sushi coming around the corner, do you see integrations between this project and sushi in particular, or with the new VC model of Wonderland being more directly investing in this VE project? Are there direct connections there? Thanks, guys. Appreciate your time.
So, Andre, I don't know these VDAO guys, so maybe I'll let you respond on that.
Yeah, sure. So, VDAO, I have mixed feelings on them, but they're playing by the rules we set out. We said that the top 20 protocols are going to receive an NFT. VEDAO launched, I believe it was yesterday, less than 24 hours ago, with the sole purpose of collecting enough TVL so that they can be in the top 20 list, so that they can get an NFT, and their token works as a fractionalized version of the NFT, so with it, etc. They launched, let me actually have a look so I can be a little bit more accurate. As of right now, they have $1.03 billion in TVL. They're currently number 3 on the list. So the reason there's mixed feelings is because they're technically speaking not a thing. They took the MasterChef contract, which was smart because everyone knows it's safe and they can deposit into it. They told people, look, you deposit into this, they're going to fully emit their token over, I think it's the next 4 days or 5 days. It was 1 day up until after the lockup. So they have an insanely high rate that they're currently emitting. And their whole purpose was to attract all of this TVL to gain access to the token. So, on the one hand, respect, they're playing the game. It was a bunch of smart moves. On the other hand, there's obviously bad reception because, they're not one of the sort of long-term contributing protocols. I'm excited to see it, because this was sort of part of the rules we stipulated. They're playing within those rules and they're gaming that, so I've got no issues with them. I would like to see them evolve into something more than what they are, because currently they're just a fractionalized wrapper. But we'll see what happens.
Yeah. So about sushi, actually, I take a little bit of time here for some updates. So first of all, I have mentioned before that I think SushiSwap should start to focus more on volumes and user acquisition rather than TVL. And in the proposal that we did during the request for the restructuring of SushiSwap, we have highlighted this quite a lot. And I think that SolidSwap and Sushi are very complementary, because my vision for SushiSwap is one, that we are going to focus on creating a full centralized exchange experience on a decentralized exchange on Phantom. So I don't know if this was very public or not, but now it is, and that is very different than an AMM. Second, there is Trident, that is concentrated liquidity, and it's very different product. So it's also then something that doesn't really compete, in my opinion, as also Andre mentioned. And third, I think that the future of SushiSwap is actually becoming an aggregator. So one of the things that I'm most focused on is how do you acquire the flow? So how do you acquire the trading volume? And I think that SushiSwap has the opportunity as a brand to become the best aggregator in the world, so the best trading interface, which also will include SolidSwap in the case in which the quoted amount or the quoted price for a stable swap or whatever, or any type of swap, it's better. And at the same time, the way that the rewards will be distributed will transition very likely to a model in which we buy the flow. So we have a list on the back end that we can use, and I've been reaching out to different data analysis companies, and we want to reward specifically certain addresses that we believe that are valuable potential users long term, and we want to buy their flow. So we want to buy the best execution, and even if SushiSwap cannot provide such execution, we can still compensate that and acquire these users for our platform, and still route any other users that, or bot or whatever, to other platforms. So I think this answers your question. Like, it's very much different the way that I see the puzzle.
So my question is more about basically the liquidity on Phantom, because you decided to let SolidSwap on Phantom, and I've known to be a guy that onboard a lot of people, and there's always this problem about, there's not enough liquidity to get actually this native Phantom and use the chain. So my question is SolidSwap gonna play a role in this liquidity problem that Phantom has?
Yeah, I think so. Like the important part is that we need to create projects that align incentives and are valuable and are innovative. Like Wonderland in this is like a centerpiece of the liquidity problem. Like we commit to push forward the value, so we are committing to also bring TVL and liquidity in the pairs that matters, especially for this launch. So you can expect that this is at the top priority for me. Like the reason why Abracadabra now is extending functionality is that by accepting Sushi LP tokens as collateral, we want to make it super easy for Popsicle to leverage such liquidity positions, and with the constant product, that is something that is launching very soon, and with the limit orders and all of this, the experience will be of very deep liquidity on Phantom as soon as in weeks rather than months.
Yeah,
so this is really...
Yeah, Daniel, I'm sorry to cut you out. What I was meaning is actually, bringing Phantom to actually the Phantom chain, for people to use the Phantom chain. Because, we always hear about, Binance, cutting the bridge to bringing Phantom to actually use the chain. So I don't know if, like, SolidSwap can play, or if you have planned actually to make it more available for people to onboard to Phantom.
Yeah, there is something coming out soon that you will see that will make this much easier. Yeah, I can't tell you. I'm sorry, as this is under like real strict what is going on.
You've reached
yeah.
Look, guys, that wraps up this segment of the show from the looks of it.